hell with college. I'm gonna get into real estate immediately. Jack Lynch brought me to his office, the branch manager of Cushman, whipped out the letter I got back from that developer and the picture and the rendering, and his jaw dropped. That developer was a very young Donald Trump. If you got the balls to write Trump and get a response, you're gonna go places in this world. You're working with a senior broker, and anything you do in the first year, 90% of that commission you earn is gonna go to him for training you. That's the cost of entry to this game. We hope you got a night job to survive because it's gonna be tough. You want that deal? I said, done.
The best way to predict the future of real estate is to build it. Michael Gerrity, 10 years in the making, man. So it's good to have you here. And I mean, what a pure-blooded American entrepreneur. And I mean, just to give a little background, is 10 years ago, I was just getting started in real estate. I was 20 years old, and he started to date my landlord. Let's get this out of the way. And I would get to talk to you. I took the opportunity. I was, just figuring it out.
You're a young pup at Camp Pendleton at that time.
Yeah, I was in the earlier years in the military, decided to live off base, moved in with a family, best decision ever, became part of the family. And, while she was doing her makeup and waiting to get picked up by you, I took the liberty of asking you questions because you'd already been in real estate 30 years at that time.
Yep.
And so I just knew I had to, I got to do my little interview then. So, and some of the things you really stuck with me. And first was, and this is why, if anyone ever if a centimillionaire that's been in real estate for 30 years tells you to do something, just do it. So you said, you told me, you sent me a link to a video. And you said, look at this video about blockchain. He's like, you're going to want to know what it is and buy some Bitcoin whenever you get a chance. Well, didn't do that back then. Spent it all on courses and door knocking and do all that stuff. But 10 years later, sure enough, developing these companies, acquiring these companies, and rolling them up under this behemoth that is World Property Ventures that we'll cover today, covering the Amazon of real estate, the new Goldman Sachs real estate, Berkshire Hathaway of real estate. So, just a pleasure to have you. So take me back just before World Property Ventures, because, 10 years ago, you were already how many years? 7 years deep talking about blockchain, tokenization of real estate.
Yeah, I was a few years into it by then because, I had learned about blockchain, obviously, from the invention of Bitcoin, which is the underlying technology of it all. But, my real estate career goes way back many decades. So I've been kind of at the forefront of a lot of stuff, way back in the day. I started in technology over 20 years ago after being in commercial real estate for 15. So I had a front row seat to a lot of changes in the industry that were caused by technology. So
incredible. So before, how'd you get started in real estate? You started at a young age as well, right?
Yeah.
22?
Yeah. So my origin story is this. I've always, as a kid, wanted to build stuff. I had Lincoln Logs, Legos, and as 10, 12 years old, I used to build tree forts in the back of our house. I'd build a tree fort and one tree, oak tree. I'd build another tree fort, another oak tree. And I'd build a bridge between the two. I was a hardcore tree fort builder as a kid growing up. So I always had a desire and a drive to build stuff. And I got my real estate license at 18 in my freshman year of college at UCF. And then I got my broker's license in my sophomore year at UCF. And in my third year at UCF, I was watching on a Sunday night on 60 Minutes a story about a young developer taking New York by storm. And after that, I said, you know what, I want to be like that guy. So I decided to write that guy a letter asking him, I'm a young guy. I want to be in real estate and be a big developer builder like you one day. How did you do it? Can you send me information about yourself, your company, your background? And about a month later, I got a brown envelope in the mail. And sure as hell, I got a bio and some renderings of projects I've done. And I said, you know what? Hell with college. I'm going to get into real estate immediately. And with that being said, I dropped out of college. I'm an official college dropout in my junior year at UCF. And I started knocking on doors of commercial brokerage firms in Orlando, Florida. And the one I focused on the most was Cushman and Wakefield. Even back then, they were one of the big dominant commercial global firms that were owned by the Rockefeller family at the time. And I went down there to 20 North Orange Avenue, Suite 800, knocked on their door, and their branch manager, his name is Jack Lynch, and the co-branch manager, Andy McCall. And I wanted to get an interview with them. They said, listen, we don't hire people unless you got 5 years experience in commercial real estate to begin with. You're a college kid right out of college. I'm actually a college dropout, no experience. Thanks, but no thanks. When you get 5 years experience, come back and talk to us. So instead of giving up, I said, you know what, hell, I'm going to keep on pursuing this. So 3 times a week for the next month. I kept on calling that office asking for interview. And after about a month of this, the branch manager told the secretary, you know what, give the kid 20 minutes this Friday under the premise that if we give him an interview, he'll never call back again. And I said, deal.
Persistence.
Deal. So I went on that Friday afternoon at 2 o'clock to 20 North Orange Avenue to the Cushman office. This is going back almost 40 years ago now. And Jack Lynch brought me to his office, the branch manager of Cushman, and said, pitch me, why should I hire you? So I did my spiel about why I'll be a hard worker, good learner. I'm passionate about the industry. He goes, that's all great, kid. But again, you're young, you got no background. And most importantly, people making big financial decisions for corporations and leasing and buying office buildings or commercial space are usually CEOs, founders, CFOs. They're gray-haired guys like me. You're not going to get their attention. I said, you know what? I bet I can. He goes, why is that? So I opened my briefcase, whipped out the letter I got back from that developer and their picture and the rendering, and his jaw dropped. That developer was a very young Donald Trump. So I wrote him, he wrote me back, and the branch manager, when he saw that, because he was from New York, he knew what Trump was. He said, hold on, kid, we'll be back in a minute. He went down the hall, talked to the other branch manager, Andy McCall. They both came back 5 minutes and said, listen, if you got the balls to write Trump and get a response, you're going to go places in this world. We're going to break our rules. We're going to hire you under these conditions. You're working with a senior broker named Jeff Sweeney, who's a very good broker to this day. And actually, he's now the branch manager of the Orlando office of Cushman. You're going to work for him. And anything you do in the first year, 90% of that commission you earn is going to go to him for training you. That's the cost of entry to this game. We hope you got a night job to survive because it's going to be tough. Is that, you want that deal? I said, done. Thank God, while I was in college, I already had a job working at UPS Monday through Friday from 5 to 10 at night, unloading trucks, making $13 an hour back then. So I had a good income. I could, overlap it with Cushman after work, 5 to 10, going to UPS. So I learned the business at Cushman the first year under the senior broker. The next couple of years I was on my own, and I made a little more money every year. And by my 4th year, I started getting to 6-figure numbers. And I realized, you know what? Why am I giving out half the money to the house when I'm doing the work? I decided to start my first company at age 27. Actually 27.
In commercial real estate.
In commercial real estate.
Which is very difficult.
Yes. This is going back 35 years ago.
Yeah.
And back then, commercial firms were mainly what they call general practice firms. They did everything. They did leasing, sales, they did financing, they did property management. And I started to focus in on this specialized area called tenant representation, which was very, very early stages. It's commonplace today. But I was one of the first tenant reps to start in the country. So I decided I'm going to focus on representing corporations only in leasing and buying space. And people said, it's not going to work. You got to be with a big firm. And over the next 12, 15 years, went on to do about $350 million in commercial transactions in that business alone. So it proves that, you follow your instincts. A lot of times you actually might be right. And we went on from there. So that's how I got involved with real estate. So I have, 24 years of commercial transaction, boots on the ground experience doing deals, mainly commercial. I did some residents on the side, but mainly commercial.
Mm-hmm.
But I'm a creature of passion. If I'm not passionate about something, I get bored very quickly. So after, 15 years doing commercial real estate and making a very good living at a young age, mid 6-figure numbers in commissions, age late 20s and early 30s is pretty good. And that's money in that terms of 30 years ago, which is, for adjusted for inflation, talking about, talking about upper 6, low 7-figure incomes at a young age, adjusted for inflation. So I decided that I was bored with this. And this is about 1999, 2000. I was really intrigued by this new thing called the internet, really started to take off.
This thing called the internet.
Yeah. So that's what, excited home, eBay and all that were big.
Yeah.
And
started Amazon.
And AOL dial-up, you got mail. That was AOL.
Oh, I can hear the screeching
which
now.
Which they just shut down last week, by the way.
Oh, really?
Yeah, there's no more dial-up AOL as of last week. They shut it down finally.
They keep it as an antique.
Exactly. So anyway, so that's how I decided to look at that, and I decided, let's mix this up. What can I do that can put together, in a mixing bowl, real estate, but also media and technology kind of stuff. And I decided to launch back then, my first internet startup was called rhome.com. The letter R, home, play on words, R home. And the idea was, because I was always thinking about how to make things more efficient. That's my North Star throughout my entire career. how do I do things more efficiently? How do I make the markets more efficient? So I was trying to figure out how can I make the sale of a home more cost efficient for the sellers. So I launched one of the first flat fee $500 MLS listing platforms in the country, ourhome.com. And we took off. I put $500,000 of my own dollars
into it. That was an MLS service.
No, it was not. It was a brokerage firm as a discount broker.
Huh.
A flat fee.
Yeah.
So because I had a broker's license, I was a part of the board of realtors way back then in Orlando. So if you give me your listing you pay me $500, I'll put your home in the MLS. And then when they contact you, you show your own property and everything else, but I'm providing you access to the MLS for $500 as a flat fee. So you're saving the 3% listing commission. You only have to pay the outside 3% commission to an agent that brings you a buyer.
FSBO.com.
But here's the beauty of this. Your listing is also on our own platform that if consumers come to you directly, there's no commission at all. So as a seller, you are in the MLS and you're leveraging all the buyer agents and their prospects to you and the 3% fee only at closing, or any consumers coming through our platform to you, the contact you do deal with, you negotiate, you have lawyers involved, things like that, at a fraction of the cost, there's no commission. And they start taking off like wildfire. A couple hundred homes in that platform within a year, doing well. Then 9/11, bam, the world shut down. And basically the platform, we had to put it on pause because the market was in shell shock. Everybody was kind of for the next year or so. So that was after 9/11. So I went back to a little bit of dabbling in commercial real estate. And then after that, I went to back into the idea, what can I do again with real estate and technology? So 5-6 years later, I decided in early 2008 to launch a real estate news platform. Ultimately, I wanted to have a cable channel for real estate, the real estate channel, if you will. I actually have the URL, realestatechannel.com to this day. Very valuable real estate URL. So I leased office space at Universal Studios in hopes of raising pretty close to $100 million back then to launch a cable channel, full-blown, like a CNBC of real estate over the web based in Universal Studios Orlando. And then that was the beginning of 2008. And then in the fall of 2008, the financial crisis, the mortgage meltdown, Wall Street collapse. Again, snake bitten a second time. Damn, I can't get lucky here.
Mm-hmm.
So we had to decide, what we're going to do. And we realized the American real estate market is going to be in hell for the next couple of years because of the mortgage crisis and 10 million foreclosures and people being laid off. So I kind of dabbled around in 2009 thinking, what am I going to do? And I came with the idea, and the strategy was, let's launch an online news company and make it international. And I moved to Miami in 2010 to launch an international news platform that exists still today called the World Property Journal. If you go to Google today and do a search for international property listings, the #1 organic site in the world over CNBC, Bloomberg, the New York Times, Wall Street Journal, Inman, Real Deal, everybody is the World Property Journal. It's the dominant international real estate news platform in the world. We've got 24,000 news stories we produce over the last 15 years covering the world's market movements. So that was my entry into the online world. And then from there, we've gone on to do a bunch of other stuff since then. But that was my first foray into it in Miami with the World Property Journal, which allowed me to learn a lot, travel the world, and come up with a whole bunch of other platforms we can get into down the road.
Oh yeah, you get a lot of context. I think anybody listening to this would be hard pressed to find somebody that has a deeper context, more time in the market, seeing the inefficiencies, launching a platform. I mean, that kind of like a FSBO style platform. I mean, that's way before your time.
Yeah, that was
way before.
Actually, a lot of back then, a lot of the agents and brokers hated it, and a lot of them started blackballing it. But actually, the DOJ, targeted NAR for discriminating against flat fee and discount brokers a couple of years later, approved my theory right. You can't target it. It's called price fixing and collusion. Mm-hmm. There was a big lawsuit they lost over that a couple of years later. They couldn't discriminate against discount brokers like me. But that was an interesting way to get into the business and learn about things. But because of my background as a publisher of the World Property Journal starting in 2010, it started really taking off, and I started getting coverage by other major news companies. We're constantly quoted hundreds of times a month by other major media like the Wall Street Journal, Mansion Global, Bloomberg, ABC, CBS, Realtor Magazine, blah, 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 around the world. So we have enormous news credibility of our content. And our editorial thesis is pretty straightforward. We're not about home improvement and feng shui and curb appeal like other things do. Our thesis is this. We want to make the audience more informed to make a better transaction decision, period. whether you buying, selling, renting, investing, financing, residential, commercial, vacation, or land, we want to give you the market information you need to determine where the market is, where it's coming from, and where it's going to make an informed That's our entire thesis of the World Property Journal.
Extremely valuable.
Yeah.
I mean, it's before, I mean, what were the indicators back 30 years ago? Because now, if you want to see migration patterns, you see how many new postal, how many new addresses are created in new states and different things like that, and these different publications. But I mean, where we're going, there's so many different data points that you can
everything
extract.
datafied and with AI and everything else there's been more data created in the last year than has in the history of of humankind. And it's just exponentially growing. Of course, all that data is being fed to AI to train the models and everything else, which we'll get into later on. But
what I find fascinating is that what you did with the platform, the discount brokerage platform, is a foreshadowing of you disrupting the industry later on with something else. It's
that actually
very
cut my
similar.
teeth.
That's where, and it was doing it way before anyone else was talking about. I mean, all these different new FSBO.com and all this. I mean, it was decades before that.
But we also had the MLS component, which made it work.
Yeah.
And we had a number of people actually have a lot of successful transactions on it, and we had a lot of praise for it. So it actually, I want to build solutions. In other words, I want to build better mousetraps for the industry that are faster, quicker, more efficient, more transparent.
And it needs it.
And they work. That's the key thing, is you want to make sure they actually do what they say they're going to do. And when they do, your sales force becomes your customer base. But because of my background in publishing and in the World Property Journal platform the last 15 years, I was then blessed to be asked to speak at conferences around the world. So this is now separate of dabbling with the internet world, the media, and prior to that, 20 years of background in transactional brokerage industry expertise. This now enters in the world of my global footprint expertise. I've been to 28 different countries, boots on the ground, working with, doing deals, or talking with, or speaking at conferences about how real estate markets work around the world. I learned some very fascinating things. I was asked by, back then, Florida Governor Rick Scott and the Enterprise Florida team to go with them on economic trade missions twice to Latin America. I went to Bogota, Colombia 1 year with them. I went to Sao Paulo, Brazil. And other trips I did on my own. I've been to China, Japan. I've been to Dubai, Abu Dhabi, throughout Europe, Latin America, the Caribbean, and blah, blah, blah. But I learned some fascinating points. One is most of the world is for sale by owner and developer inventory. Many countries do not even have real estate licensing laws, never mind MLSs or associations. If they do have MLS associations, they're very weak. The penetration rate of the MLS industry and realtor industry in the United States is very high. They've been very successful in America. On average, any given year, between 91 and 93% of all home sales transactions have a realtor in the middle of that transaction one way or another. Mm-hmm. In Brazil, it's less than 10%. The penetration rate in Brazil against their 3 or 4 million home sales a year back then, in the mid-teens, when I went there, was like 10%. Oh, Mexico, for example, big country, a lot of people. They don't have real estate licensing laws or MLSs. Costa Rica, I mean, there's other places that have, markets that are active, but there's no real MLS capabilities. And that's what gave me the light bulb idea to build the Zillow of the world. And in 2015, I moved from Miami, Florida to Southern California. That's why I met you about a year or so later, to Irvine in Orange County, because I want to tap into some of that real serious real estate technology talent, which is in Southern California. It wasn't in Florida. It's, even to this day, as much as Florida is growing and taking off in technology, California still got the hardcore, especially with AI now. It's now the epicenter of the world again.
Especially Irvine?
Yeah, well, actually, the San Francisco's for the AI, but from a real estate technology perspective, you got huge, dominant technology, proptechs, and mature companies. You have people like CoreLogic, now it's called Cotality, one of the biggest data providers in the world. And you have the southern headquarters of Zillow's there. Zillow Group is in Irvine, California. And you got, Financial or Fidelity Title, you got house.com, you got auction.com, you got 10X. I mean, you got all these major players based in Orange County. So that's a real big market to tap into some core talent. But anyway, I moved out to California and we thought about it. We ended up launching my second tech company in real estate. A big company in real estate was in 2018, Global Listings, globallistings.com, which when we launched it, we opened up the listings for free. It's all categories of listings: residential, commercial, vacation land, sale, rent, auction, or exchange. That started taking off. People were posting around the country. First month we had maybe 10,000. The next month we had 25,000, 35,000. Within 2 years, we were onboarding 1 million listings a month in dozens of countries. And then in 2019, we started thinking about adding a paid product. So it became a freemium model, free listing. But if you pay a premium listing ad, you get up in the search results first, blah, blah, blah. And that started taking off. And then into 2020, we started really ramping up with the freemium product. And then the spring of 2020, boom, COVID. Here we go. Third time. First was 9/11. Second time was Wall Street crash in 2008. Now we're dealing with COVID in 2020. And the world shut down, as we all well know. And COVID created some interesting warps in the market, both in the U.S. and international markets. International market is shut down. No planes, no movement. International market was absolutely dead for real estate for the next couple of years. And the American market, that anomaly occurred where people started running out of lockdown states into open states like Florida and Texas, from California and New York and elsewhere. And it became an overheated market. You could show me in the MLS, it would sell in an hour at 5 bids over asking. So when you have a overheated market, realtors and home builders don't need to advertise. We're an advertising platform, so you don't need us. Mm-hmm. And for the next 2 years, from 2020 to 2022 and COVID, the market was overheated. And then something very interesting happened. In 2022, the spring of 2022, mortgage rates started to rise rapidly to the fastest rate of rise of a mortgage in the history of mortgages in the last 50 years. It went from 2.5% to 6.5% from the spring until the summer of 2022.
Oh, I remember.
And that we went from a overheated market to a frozen market. Because roughly 75% of American homeowners at that time had a mortgage under 3%.
Oh, it was almost a dead stop.
It was a dead stop. It was.
I was running a brokerage at the time, and it was just, it plummeted.
Yeah. So again, overheated is not good for real estate advertising platforms like us. Locked up markets aren't very good either. So we decided to think about other products we could launch, and we did. And we came up with some different enterprise caliber subscription services, which we have now going today. We have the ability to license our data to third-party sites. So we have data license capabilities for global listings. We also have our version of a Prime membership for professionals. So real estate professionals like agents, brokers, builders, developers can join our marketplace for a flat monthly fee as part of a member benefit, upload X amount of listings a month for free. So if you look at a consumer-facing search marketplace with a subscription service for power users, and then infrastructure and data license capabilities as a service lineup in real estate on global listings, kind of sounds like Amazon. The marketplace for e-commerce, the AWS and the data licensing. So that's why we call global listings the future Amazon of real estate. And the good news is we accommodate everybody. It doesn't mean if you're a builder, broker, developer, owner, landlord, anywhere in the world, you can use our platform for your listings. And the good news is, even all this, I'm gonna use a big word now, a big $3 word called disintermediation, which means to get rid of the middleman. So as technology and AI start to disrupt the middlemen in the industry, it doesn't affect us because our job is to bring market participants closer together, faster, quicker, cheaper than ever before. So we're about cost efficiencies and reducing the customer acquisition costs for sellers worldwide. And at the same time, there's 15 million different real estate websites around the world today of different categories and languages that we have the capability of consolidating the experience for a search for a user. Instead of bouncing around different websites to look at different listings on different sites that you're looking at a certain area, we have the ability to create a snapshot on a single platform called World Property Search. So that's part of our ecosystem of companies, our future search engine.
It's a pain. If you try to find a new home build, sometimes they're always tucking them away. They have different, in California. Yeah. I mean, unless you go to their website, sometimes you can't even find the listing. Yeah. Or they'll be like, the algorithm is different. Sometimes clients like, I saw this on Zillow, but I couldn't see it on your website because our MLS wouldn't pull it correctly because of that same reason. Yeah. There wasn't a singular unified place where you could find everything.
So to answer this long-winded, 15-minute answer for my origin story, that's where I came from. And then recently in the last year, with all these different prop tech platforms that I've built myself and my money and other partners around the country, we have now formed a new parent company structure called World Property Ventures. And that's what I'm doing today. Is World Property Ventures is now the new parent company to a series of 4 portfolio companies focused on specific themes to help make markets more efficient, transparent, and consolidated for everybody.
Yeah. So another thing that stuck with me that you told me 10 years ago is you said, don't ever build a career as a realtor, a title rep, or a loan officer, because one day my companies will make them all relevant. Sadly, and one day you pointed at a house across the street and you said, one day you'll be able to buy a fraction of that home, just like you buy a fraction of a company on the NASDAQ. And that really stuck with me. I ended up getting into being an agent and running a brokerage through COVID. 5-6 years later, went through like home flipping and stuff in the meantime. And then in 2023, I left because I saw that same thing happening. Realtors are being devalued every year. Sure enough, the next year that court case was won. And now, so explain to me let's get into World Property Ventures, and then we're going to get to like who is at risk in the new economy? Like who is at risk and why with blockchain technology and all these different inefficiencies that you see that are going to be solved for.
Okay.
So first, let's get what is World Property Ventures as the parent company, and then let's kind of describe the children underneath it and how they kind of coincide here.
Absolutely. So World Property Ventures, think of us in terms of we are a global real estate developer in the digital world of real estate. Let me say that again. A global real estate developer in the digital world of real estate. Just like traditional brick and mortar developers build office buildings or data centers or warehouses or new luxury condos in Miami or master plan communities, suburbs or retail, and creating shareholder value, building brick and mortar assets. We create shareholder value by building digital assets. And the 4 key themes we focus on are digital infrastructure, which can mean real estate listings, marketplaces, search engines, matching engines, those kind of things. That's our digital marketplaces theme. And it's all being done with an asset called World Property Markets. That's our child number 1, which has global listings in it, our future search engine, World Property Search, and other things behind that. The second child, if you will, our portfolio companies focus on information ecosystems. A lot of the world doesn't have the proper data and news and information to make informed transaction decisions. The US does because there's so many data sources and news sources, but a lot of markets around the world don't. And therefore, leveraging the World Property Journal as the flagship under the ecosystem, the market information ecosystems group, we actually have a parent company for that called World Property Media. So the second child, World Property Media, is the operator and developer of the Journal, which exists today. We've been around 15 years. But from that, we have 3 other future projects we're developing under that. The first one is really cool. All that news production we're doing, and we'll be doing much more in the coming years with AI on the World Property Journal, will be leveraged to build out in Miami next year a full-blown broadcast news center and launch over the internet the CNBC of real estate, beamed off the web, but also have consumer content of travel and home improvement, home decorating, designing as additional content called WPC TV. If you go to the website, WPCTV.com, not .com, .tv, WPC.tv, you'll see our coming soon site. But you'll have the ability, like a Netflix platform, to look at it. And the anchor offering will be our news, daily news content, 6 hours of programming a day, like Squawk Box on CNBC, talking about real estate market news and information and interviews to give the 60 million real estate professionals around the world an update on what's going on in the industry every day. That's one reason to use that platform. And then we'll also have a lot of consumer stuff, which opens up to a much wider audience of people that eventually, we'll be licensing a lot of existing programming out there, whether it be travel stuff or home improvement, home design, aspirational, things like that. But then we'll do eventually, like Netflix did eventually, start doing original programming and documentaries. So it'll be a whole suite of consumer entertainment content on this platform. And the addressable market for that's 2 billion people. There's 2 billion people on the planet that have the income, the internet access, and the interest in real estate to be a potential subscriber for, $8, $9, $10 a month.
Oh, I mean, I'm binging YouTube.
So this is basically a Netflix of real estate on a global scale. And the revenue potential of this thing is into the billions over the next 10 years. So with the addressable market like that. So that's asset number 2 under the World Property Media Group is we've got the Journal, we've got WPC TV. The third one is much of a enterprise caliber service. This is a hardcore news data kind of platform, signals intelligence kind of platform. It'll be a couple $100 a month subscription to it, but it's targeting the 60 million real estate professionals who make their money in real estate, whether it be a builder, developer, investor, broker, also includes title and finance and mortgage and all that stuff like that. But this will have a platform of integrated news and data and market activities every day. So what is it when you have listings and data news on an integrated screen? What is that service called? Think about that.
Listing and news on one. I mean, it's
an
not
integrated
MLS.
information news data platform for a specific industry. What is that platform called?
It's a marketplace.
It's called the Bloomberg Terminal.
The Bloomberg Terminal.
What the Bloomberg Terminal does for the global financial industry will do for the global real estate industry. A enterprise caliber, major league information data source for real estate professionals to log into and have the world's known knowledge. Here's the difference. Information, you can get a lot of places, but information is just the raw data. We provide the knowledge. The knowledge means not only you have the data, but you can understand where the data is coming from, and more importantly, how to leverage it to your benefit. So we're a real estate knowledge platform. That's a very powerful.
It's very different.
It's a very different thing. So it's called Property Signals, PropSig for short. PropertySignals.com is a coming soon page for that. So those are the kind of things we're doing for the World Property Media Group, the second child. The third child is out there. The third child is World Property Bank, the world's first digital real estate investment bank. Think Goldman Sachs of real estate for the future economy of tomorrow, involving tokenization, blockchain, AI, and digital investing of all categories of real estate. And like a investment bank, and people don't realize this, the U.S. stock exchange, the U.S. stock industry in terms of buying and selling, New York Stock Exchange, NASDAQ, CME Group, there's 13 lit exchanges. I'm going to get into now some of the financial plumbing of Wall Street to lead into where I'm going with the real estate side, but it starts with mimicking Wall Street. So in the financial sector, Wall Street, there are like 13 different what we call lit exchanges. Lit exchanges are public exchanges governed by the SEC, full transparency, price disclosure, who's buying, who's selling, what price point of what stock. 13 lit exchanges. But there's 39 or 40 what they call dark pools. What the hell's a dark pool? A dark pool.
Couldn't believe this when you explained it to me.
Yeah. The dark pools are the private stock exchanges owned by the major investment banks like Goldman Sachs, Morgan, and others. So there's almost 40 different private stock exchanges and 13 lit exchanges like the NASDAQ and the New York Stock Exchange as a consumer. 75 to 80% of the daily flow of stock trades any given day in the United States goes to the dark pools, not the lit exchanges. So, and these are made for the institutional traders. And there's not that price discovery you have like in the public markets. And these are designed to help the banks and their institutional clients move big blocks of stock. So if you're a pension fund and you want to unload 1 million shares of something in the public market, the minute that people know that a big whale is unloading a ton of whatever company stock, the stock will implode, hurting the seller of the stock, the pension fund. But in the dark pool, they can sell it in little blocks and spread it out amongst different dark pools. And no one who's buying and selling it, they don't know there's a whale dumping, so the price doesn't get hurt. So dark pools. So with all that being said, we see a similar opportunity with our own World Property Bank. It's going to be a fully SEC licensed, regulated bank, like an investment bank. It has three core functions in life. One, to structure and originate digital securities in the real estate marketplace that include debt, equity, credit, and derivative products. So these are going to be next generation investment products. So we can tokenize real estate around the world in fractional shares, tokenize real estate debt, credit. The credit market, private credit is huge in the growing fast marketplace.
Extremely.
And derivatives, which are esoteric, basically Wall Street bets of anything you want. But the ability to tokenize that and offer it up to the smaller, medium-sized investors who can't play in that market now because they're not big enough and write big enough checks. It's only for the big Wall Street firms today. So the origination and creation of those products is function one of the World Property Bank. Number two is the owner and operator of World Property Exchange. WPE.com is a coming soon page. The World Property Exchange will be the world's first, again, SEC regulated digital stock exchange, but it's really a digital token exchange for the issuance of all these structured products we created over here with that group of the bank, debt and equity and credit, issued and then traded. This will be a highly liquid environment to buy, sell, and trade shares, fractional ownership shares of real estate and or the debt or whatever that may be. So this platform will allow small and medium-sized investors to now participate in institutional grade real estate deals at a micro level they can't do unless they write, $10 million checks to the Blackstones of the world or whatever it may be for their big funds. So again, as I said early on in this interview, our North Star is about every company we build and finance is solving a problem. In the case of this exchange and the World Property Bank entity, we're trying to democratize high quality real estate investing for the masses. Here's an interesting stat. Wealth inequality in America is significant. And it's driven by not what you think. It's not racism. It's not education. It's if you owned a home in the last 20 years or you didn't. If you owned a home in the last 20 years versus you didn't, you have a 600% bigger balance sheet than those who didn't. So our theory is if you can't own a whole home now, because of affordability issue and everything else, now you can own a piece of a home.
Exactly.
You can own 1,000, 5,000, 10,000 shares in appreciating single family rental properties that are also throwing off income to provide a dividend to you. So as you build a portfolio, so one day you can open an account with World Property Exchange, and you could be either unaccredited, accredited, or qualified. Depending on what you are, you'll see different things by SEC law. But you could theoretically open an account like Coinbase or whatever other platforms, Robinhood, wire in your money, and then from there you have an account. You could say allocate $1,000 or $2,000 to single-family homes in Orlando, another $2,000 to data centers in Virginia, another $2,000 data centers in Chicago, whatever. You can build a portfolio, and then because it's a highly liquid market, you can move in and out of positions at will anytime. So you can eventually craft your own portfolio. This is a small, medium-sized player. But when you start to get big scale, then you start to have the institutions coming in. You could have a sovereign wealth fund say, I'm going to put in $100 million and buy 20% of Orlando, 20% of whatever other market in data centers, Virginia, and craft portfolios around these tokenization products.
Yeah, so let's bridge the gap between the understanding of the way real estate functions today and the fact that it's illiquid. It's one of the biggest things. It also is one of the benefits of real estate too. I'm very curious, what you see in the next 10 years as tokenization hits real estate becoming a liquid asset, because the reason a stock can change and plummet 20% in a day is because it's liquid. Everyone can just dump it.
Yeah. So first of all, we're talking about, this is not real estate we're talking about trading here, is for your end user consumer to live in. This is about investment products to invest in to build your portfolio of wealth.
Exactly.
So this is not competing with, per se, the traditional MLSs of today. With that being said, this is for investing in the products that are hand-selected by us. We'll have a research team that will look at the marketplace every year and determine what are going to be the best performing real estate asset classes across the country over the next 3 to 5 year horizons. Go out and buy those assets with our own balance sheet, bring them in, tokenize them, and IPO these individual properties on a platform for you to come buy little shares of. As we liquidate our positions, we'll go out and buy another swath of real estate, bring it in, tokenize it, liquidate it out. So you can pick and choose whatever you want. This is not like buying a home. Now, eventually you'll be buying homes at point and click. That's a different discussion for the end user cycle, but this is the investment cycle over here. So they're kind of, but that's that's coming too though.
Yeah, that's separate. Because the real estate's the only way to access your liquidity is to refi cash out if it's there.
Yeah.
And then you have to get a new interest rate or a HELOC if you qualify for it, or you sell it.
Yeah.
Right. So that the fundamentals of the tokenization that'll hit is that equity will become liquid.
Well, there's some looking at the idea of going to existing homeowners and becoming co-joint venture partners with them in their home and tokenizing.
I've seen those models,
but that's kind of very sketchy. Kind of.
I've seen a HELOC model like that. It was trash.
I want to control the asset.
Yeah.
Absolutely control it, because you never know, they might have an IRS lien coming up you know about, which wipes you out, or some other issue.
Oh yeah, always takes.
There's a lawsuit. They were
presence.
DUI. They ran over somebody and now being sued for $10 million by one of these law firms. And also that asset becomes embroiled in that lawsuit. So we want to own the outright assets in our platform. They'll be hand selected and going from there. And then actually the third platform under the bank, and this is really new, but I think it's a huge opportunity. It's very similar to Poly Market, which is the prediction market, which elections and that's really come along. They're called DeFi event contract markets. So real estate predictions is that third entity under the bank. Realestatepredictions.com is a coming soon page. But real estate predictions will allow anybody to place a contract of a bet on anything in real estate. Interest rates going up every week, going down, to what amount, home prices, velocity, whatever it may be. What's the next cap rate going to be next month in America? And basically, somebody could create a bet on the market, would be $100, $1,000, or $10,000, and somebody else can take the opposing position of that bet. So basically, it's a betting market for real estate market movements, but more importantly, it's a prediction market because it's called the wisdom of the crowd, where now you have thousands of people placing bets and betting either side of this thing. It usually becomes a very good predictor of what really is going to happen in the future before it happens.
Yeah, you can see the sentiment.
So this is predictive market analytics, and the tagline is turning trends into tradable assets. Turning trends into assets. The ability to bet on market movements and understand them and make money at it. It's basically, it's lack of a better term, it would be a casino for real estate betting.
Yeah, when you showed me that other market, I was like, I can't believe what people are betting on.
It's billions of dollars of traded hands on these markets, like Polymark and others. I mean, I think there was like $6 billion bet back and forth on the 2024 election with Kamala and Trump. And it predicted very accurately Trump winning. So the accuracy of these platforms are very good. There's another new one, I forgot. It's called Kasashi or something like that. I don't know if that's not the right name or not, but it's close. But nonetheless, predictive markets are the new thing. And it's very interesting, but there's nothing like that. But from an institutional standpoint, the derivative markets in Wall Street, over $100 billion a month is bet by institutions on interest rate movements of the mortgage industry. So $100 billion is bet every month in these derivative markets, like a CME Group and New York Stock Exchange parent ICE, the ICE. That means there's a market for it. But those are the institutions. But we're going to now democratize that to the small or medium-sized investor to participate in these kind of market-moving events to liquidate or to place bets on as well. So the World Property Bank, the third portfolio company, has the origination of products, the operational exchange to issue and trade those products, and then the third is the betting marketplace on real estate market movements, World Property Predictions. So the fourth and final child that we'll be developing over the next 10 years is basically called government proptech. And this is, kind of almost theoretical, but there's large applications here. So one of the things we do with government proptech is basically create proptech technologies and solutions to help governments with real estate assets. For example, the ability to create digital block title platforms of property ownership records for every county in America. Most countries around the world don't even have proper land registries. So we can become the backbone of sovereign nations' database of property ownership through a blockchain platform to give these governments an understanding of what's in their own backyard. And if they want to create a taxing regime, they know the owners and everything else. It's all blockchain, the metadata and all that stuff. So we have a company called Block Title, based on blockchain, Block Title, blocktitle.com. And that's being developed to create basically an not only US, but global blockchain platform for property title and ownership records for counties, federal governments, or sovereign nations around the world.
Yeah, title's a pain in other countries.
Yeah, exactly. And a lot of
Absolute
don't even have them.
Oh, yeah.
So this is the next generation, but it's a title service of governments around the world. That's one of the cool projects under the government solutions. The other ones is another one that's really kind of interesting. It's called property ontology, which is kind of layered on top of the blockchain title. Once you got the property title and all the ownership information and kind of the property records, and as well as the financial information, the bank, the lender, equity kind of stuff like that, you can then start layering on top of that all the relevant metadata relative to that real estate ownership, in terms of the capital stack, and then also the vendors, the liens, and then layer on top of that, the three-dimensional digital twins, where you can digitally map with LiDAR and things like that. So now you have a three-dimensional visual representation of a built structure and all the related metadata, ownership records, title, all that for the governments. That application is big for 2 or 3 reasons.
Oh,
this is the application with the digital twins and property ontology is what a great tool to sell to law enforcement. Now they have a visual representation. If they got to go into a building where there's a domestic violence thing, they can see what that structure is like, what's in that structure, kind of layouts and all that before they have to enter because of not knowing what they're getting into. But more importantly, defense, military.
Oh, military surveillance and urban warfare.
I mean, this is like geospatial, but with real estate built into it, where for urban combat and everything else, the ability for intelligence agencies and things like that to have a visual representation of these urban centers that they're involved with, and how they're laid out or how they're doing and all the metadata, that can be tracked. And also the third application of this for this government solutions is when you have all that information about the property, the ownership, the digital twins capability and all that rather metadata is the real big problem that this really helps now with the intel agencies and the governments is money laundering. We're now creating an anti-money laundering tool. Over $1 trillion a year is laundered money around the world, mainly through real estate.
Through property exchanges or fake ones, rather.
Through buying and selling real estate. You know how people launder money? A cartel launders money. They go out and buy a piece of real estate or a couple pieces of real estate, like rental properties, in cash, sit on it for a little bit. Then they'll finance it, take cash out. Boom, that money's laundered. 75% loan to value. They launder the money, taking it out in cash in these entities. Then a year later, they'll sell that asset and get the remaining 25%. So it's the mortgage, it's a refinance of these rental properties and assets. So the tracking
the hard cash, can't use it.
But it's been laundered now because it was a cash out of a refi. So there's some significant, so FinCEN and your Treasury Department, all that, the Department of Treasury, that is called FinCEN, that tracks all these money laundering activities. They work with the CIA and governments around the world, but a lot of despots and cartels and bad actors move their money and clean it through real estate around the world into the hundreds and hundreds of billions of dollars a year. And they are actively looking for those kind of tools. And if we are mapping the world's inventory of real estate and the activity against it and all the metadata around it, that now becomes a fantastic platform and tool.
Oh, phenomenal.
Again, solving problems, reducing money laundering through real estate around the world. These are the kind of really, really advanced.
That's fundamental.
This is, classified stuff. And this is really getting into the hardcore world of government defense and CIA. This is like the world of Palantir, which is, I love that company. It's a really cool company. I don't know if you know the story about that. They're founded by, or they got the funding from the CIA, Peter Thiel and
go for it.
Alex
Actually,
Karp, and they're basically finding needles in haystacks using AI technology and scale. And
two young kids, right?
What now?
Two young guys, right?
Well, it's Peter Thiel and Dr. Alex Karp back in Stanford 20-something years ago. They decided after 9/11 they wanted to use technology and AI and data to find bad guys that did 9/11. And of course, back then, Silicon Valley didn't want to do business with the government. So they had a hard time getting funding. But they're finally able to get the first funding, I think it was $3 million that they got was from the CIA, In-Q-Tel, the CIA's investment arm. And then from there, they developed their platform. And today, Palantir, which is a huge success story, publicly traded stock, blown up big time the last couple of years, is now into the commercial space. But they also power most of the world's intel agencies and militaries with their technologies, with their AI to work with military situations and analyze data at scale to make informed decisions. And
it's incredibly massive. It's in everything.
Yeah, but their platforms, one of the platforms were used to help find Osama bin Laden. So anyway, they're about using data scale and technology to find needle in haystacks. That's what we do. We're basically defanging a Palantir type technology, but to find needles in haystacks, matching perfect buyers to perfect sellers in real time and mapping all the data and metadata and activity and behavior around that for real estate worldwide. So that's kind of where it's all going.
And that relates, so you described the World Property Ventures as the Pentagon, and then all of
that's basically the best way to look at it. We talked about earlier off camera, but yeah. So think of the entire ecosystem of World Property Ventures as World Property Ventures at the Pentagon, and it has its various branches of the military to do different things, execute on the Pentagon strategy every year. They have the Army, Navy, Marines, Air Force, Coast Guard, Space Force, blah, blah, blah. So World Property Ventures is our Pentagon. It dictates policy, and it also sets the budgets and raises the capital, and then deploys its different branches of his own military or own portfolio of companies to execute on different strategies that we have to do to make the place a more efficient market, a better market for market participants around the world.
Amazing. And then you describe also the, so I believe it's the sniper package, just to stay on the military theme. Because
living next to Camp Pendleton for the last 10 years in San Clemente, I've got a chance to meet with a lot of really cool military people and service members and SEALs and black ops operators and things like that. But one of the things I learned that was kind of interesting, which I now used in one of our business models with global listings and the future search engine, World Property Search, is what we call our sniper package. So in the U.S. Marines kind of developed this capability, I think it was in the 70s, to pair a spotter and a shooter. And the spotter's job is to identify and find and track the target. And then from there, provide the distance, the wind, the humidity, all the data to help the shooter dial in his rifle for an accurate, clean first kill shot. So the spotter tracks, identifies, and homes in on the related data to execute on that target, and then transmits that to the shooter that pulls the trigger and gets it done. Spotter, it's a highly efficient way to take out of or identify
I spent
targets.
Hours and hours with these guys.
So the spotter shooter thing is what we use now. So in the first child, the World Property Markets portfolio, the current flagship is operational, global listings. It's basically a listings engine. That's where people go to list their property on us, pay us a fee, and we expose it to the world. But it's basically a listings engine of people placing their listings on the platform. The future platform that's going to be built in the coming year using AI is called World Property Search. It's a search engine, listing engine, search engine, wildly different functions. So World Property Search, once built, will go out and index all 15 million known real estate listing sites around the world of all languages. When you download the app one day for free, you'll talk to it in human language, of whatever language you want, dozens of different languages, and tell exactly what you want. Let's say you want to look for single family, 3-bedroom, 3-bath houses in Orlando, Florida, in the 500,000 to 700,000 price range. That search engine will suck up every listing from every source in the market, whether it be a realtor, MLS, FSBO, home builder, bank REO, or other source of listings, and provide you a clean snapshot of every listing that fits your profile and location and price range from every source. And it will cite the source just like Google. And then from there, you'll be able to click down into whatever listing you want. So what's going to happen here is because it's going to be a highly efficient tool, you can talk to it, and we're not relying on everybody posting listings on it. We have the world's inventory at your fingers automatically. It'll be highly traction. It will grow fast with user searches around the world very quickly. And we think within 5 years, we could have, 400 or 500 million monthly visitors performing tens of billions of searches.
I mean, there's been so many examples of different companies that have done consolidations and indexes, and that's what makes it successful.
Yeah,
right?
well, there's a consolidation of the world's real estate listings inventory in one single place. So, but what happens is when you have a search engine like that specific to listings, the first thing people do is when they're looking at properties, the people selling the properties are finding out, oh, well, we found this on a World Property Search. Well, they're going to ask, how do I get my listing up top of the search ranking like they do at Google? And our answer is simple. Click here to get your listing verified. When you click on getting your listing verified in the search engine, we're going to send you to global listings where you're going to pay a fee to get on global listings because global listings will all be shown first on the search results of the search engine. So it's a feeder market, but what happens is this. The search engine is the spotter. It drew out activity and buyer intent and all the other interest levels of the behavior patterns. So we have their IP address. We know what they're looking for, in what quantity, frequency, and all that stuff like that. And with all the information, we can then start sending the listings and global listings that fit that profile to that guy in real time. So we're now, basically this is a spotter and global listings is a shooter. But in terms of shooting them, we're monetizing them. We're monetizing that activity. So and
you're showing them what they want. Like exactly. At the consumer level, it's beneficial to them.
And it becomes highly predictive analytics. You now start showing them stuff they never would have thought of.
You got to work through a lot of smoke and mirrors to see what you want to see sometimes.
But the data exhaust coming off of this platform is biblical. We start talking about, I think Zillow gets like 220 million monthly visitors against, 1 million plus listings in America. Our search engine, we think we get 500 million plus in the next 5-6 years, which is more than double Zillow's traffic. And the average user would probably do between 7 and 12 searches per session. So you're talking about tens of billions of searches a month. The data exhaust and the pattern recognition capability is biblical. In effect, that platform will become the world's EKG of the real estate market's heartbeat in real time. It will be the real-time signals intelligence of searches, movements, and markets of what people are doing around the world. That's that's a moat that can't be overcome.
No, and that's what's so interesting about this time in history. So 10 years ago,
Doable.
the adoption it wasn't doable. That's why when I caught up with you after 10 years, I'm like, the time is really now, because, and also like there's more of a sentiment to buy out a country too. So people are buying countries, a condo in Mexico or Costa Rica now and things like that in these other countries. But unless you, like in Costa Rica, just to circle back on that, unless the closest thing to an MLS is a dominant realtor that was set, they recognized that and they made themselves a single point of focus, and they're just shooting fish in a barrel.
Yeah. So, and by the way, I mean no ill will to realtors. I love them. I've been a broker myself, made a lot of money in life as a broker. But technology is like gravity. Ultimately, it's non-negotiable. Technology and AI are going to compress commissions in real estate like it did everything else. And to put this in perspective for your audience and you, let me give you some numbers now on the scale and size of what we're talking about here. So in the American market, 350 million people. Any given on a normalized market before COVID, I'm going to talk about 2019 numbers. In the United States, against 350 million people roughly, there was any given month average between 5 and 6 million active listings of all categories for sale or rent nationwide. Residential, commercial, land listings, vacation, sale, rent, auction, 6, 7 million attempts, not closings, attempts of all categories. And then when a transaction occurred, usually it was a broker involved in 90% plus of those transactions against 350 roughly million people. Outside the US border, against the 7.7 billion people outside of the United States, there's 150 million attempts every month to sell or rent all categories of real estate and transaction types, of which a penetration of a broker or licensed professional is less than 10%. Newsflash, to most of the world don't know this, most of the world's for sale by owner and developer inventory. Highly underserved, highly fractured, and fragmented. And that's the greenfield opportunity that when you start consolidating and providing services to huge underserved marketplaces, we're talking about billions of dollars a month in revenue 10 years out.
I mean, there's literally, these cities being built in Mexico. These big developers are getting up these big swaths of land and building small cities.
It's all over the world. Massive development.
Oh yeah.
But the point is as these markets evolve, we provide the market infrastructure and plumbing and stuff to transact that and provide them services. That's a very powerful thing. We're basically like the operating system of the world's property markets, with global listings and the search engine and stuff like that. But technology is going to compress commissions. I'm going to give you a little analogy for backdrop here about what's going to happen the next 5 to 7 years in real estate that happened in the last 20 years in finance. So I'm going to go with the story of this young energy trader named Jeff Spriker. And he's a very successful businessman today. Most people have never heard of him. He's probably one of the most successful, relatively unknown business people in America. And he's been one of the kind of people that I've been a role model to me in terms of watching what he's done and how he did it. So he used to be an energy futures trader in Beverly Hills, California, 30 years ago. And for 200 years, stock exchanges operated on a process called open outcry. Men in pits with funky colored jackets, yelling and screaming, buy, sell, writing down. So you can see this in the movies like Trading Places and all that stuff like years ago. These
bizarre
pits. It was
absolutely bizarre.
It was a free-for-all of men trading in the pits. 200 years buying and selling stock. This guy said, that's crazy. Somebody should build an electronic bulletin board for the trading of stocks and futures and all that stuff. And he decided to build this company based upon going to Atlanta. He bought a somewhat defunct trading company. I think it was like for a couple bucks, and took over the debt. But he used that as a basis. It was called the Intercontinental Exchange. And from there, he wanted to go out and raise millions of dollars to build this platform. Talked to a lot of people, and they laughed him out of the room. But ultimately, he built it. But somebody stole his idea before he got it out, and they started doing well. And when they started doing well, Wall Street realized there's a market here. And then when they found they stole his idea, they went to him and said, hey, we know this company stole your idea. Let's do it with you instead. So JP Morgan and Goldman Sachs gave him, I think, $70 million to build this new automated electronic bulletin board for trading energy futures and eventually stocks. That company that stole his idea eventually blew up, and all that business went to him as well. That company that stole his idea was Enron. And the Intercontinental Exchange today is now the owner and the operator of some of the biggest lit exchanges and derivative markets in the world, based in Atlanta. It's probably, I don't know what the market cap is today. It's probably 60 billion plus. But it's the owner and operator of the New York Stock Exchange and other stock exchanges around the world, command and control in Atlanta, Georgia. Now replace the word exchange with MLS. You got the marketplace group of us that ultimately our platforms will replace the MLSs in the United States and elsewhere with much faster, more efficient stuff to help people, whether it be a builder, broker, realtor, agent, buy and sell real estate faster, less cost. Because at the end of the day, these platforms we're building on these listing platforms and search engines, again, the North Star, solving problems, is to reduce customer acquisition costs across the world for every seller. And the numbers for that alone are $500 billion a year spent by sellers worldwide every year to acquire a customer to buy or rent a property. And we can reduce that cost by even $100 billion a year. For every dollar we save a customer, we're making 10 cents. So the math is you're saving $100 billion in costs, you're a $10 billion a year company because of the scale of the world.
I mean, ask a realtor if they, what realtor likes the MLS? Like, oh, this thing functions great, never has any problems.
There's some hardcore people that believe it. And
I mean, there's got to be something.
But there are a lot of people unhappy in the industry with the MLSs, the associations, and there's been problems with NAR and the lawsuits and all the, DOJ lawsuits, stuff like that. So the industry is going through a disruption of its right now by itself. So a couple of years ago, NAR had, I think, 1.6 million members. I saw a report recently that by the end of this year, NAR membership is down to 1.2 million. That means they've lost in the last 2 years 25% of their membership, if that's true. That they only have 1.2 million members by the end of this year. That's a catastrophic drop in membership. It means a catastrophic drop in revenue for the company and the MLSs, the local MLSs that require realtors to be in the business to pay the fees to generate the revenue for the MLSs. Here's another stat. Last year went down in America in 2024 as the worst home sales market in 30 years. 25 is going to be worse. In 2024, 74% of all realtors in America made zero commission. Think about that. Think of an industry of over 1 million plus members that 3/4 of its association made zero money last year. That's catastrophic. And with AI and automation that will be automating a lot of the process in the next 5 years, you're going to see a bigger reduction in that number. That, again, I mean no ill will. A lot of my friends are realtors. I've been a broker and all that, but the market's going to change. I tell my broker friends, make as much money as you can when the market turns in 2026 and 2027, because 2028, the wheels come off. Commissions are coming way down very quick in the next couple of years. It's going to be a world where it's 1% either side.
Yeah, I mean, I already started. I left the broker world, the residential world in 2023, and I am so glad I did the hop into commercial because I started to see the symptoms of that and conversations that we had that were like planting seeds. I mean, for a long time, and I mean, now today, it seems like it's just kind of a snowball.
Yeah, and I feel bad for them because actually I've been telling them you better make as much money as you can, but realize the end is coming. And there's a lot of people that get pissed off at me when I say that. But listen, I'm trying to help you out here. I'm not trying to hurt you, but I like to be truthful. I can be the politically correct and varnish it off. Don't worry. Here's the big lie. Like a lot of things are told in life turn out to be a bunch of big lies. For example, inflation's transitory, America. What a bunch of bullshit that was, right? So here's an example of that AI is your friend. It's going to be your helper. It's going to be your co-pilot. It's going to be your assistant, making you more productive. Yeah, while it learns your job. And then 3 years, it's going to do your job. Make no mistake, AI is going to replace a lot of jobs in the coming 5-6 years. And this is something I also tell people, which is kind of a hard pill to swallow. We need to start thinking about what happens to industries that get decimated in the next 5 to 10 years. We're talking about potentially tens of millions of jobs, and these are mainly white-collar, professional, educated jobs being replaced by AI. Now, here's the argument the other side makes. Well, in every type of revolution, whether it be the agricultural to the industrial to the information, now to AI, those jobs being replaced were replaced by new jobs. If you're working in the fields in agriculture, then you became a worker in the steel factory. And then when you replace, mechanization with information, software programmers were created. So it was a 1-to-1 ratio of job loss to job creation. This is different. This is why everybody forgets this point. AI doesn't replace your job at a 1-to-1 ratio. It replaces your job at a 1 to 100,000 ratio. One AI can replace 100,000 programmers at Facebook and Google like that. So no, It's not, oh, new jobs will be created in America. Don't worry about it. You'll be okay. They're idiots. I hate to say it, because this is disruptive, because it's replacing at a ratio never seen before. It's not a 1-to-1, it's a 1 to 100,000 ratio.
No, I read an article, and it was like there's a 40% increase in college graduates that are not getting jobs in their field. And then also the government, it was government publication. It was like 70 to 90 million jobs will be created in the next 3 to 5 years, but that even is a complete lie. So that's them trying to cover it up and say.
And I think that, they're always trying to ease the consumer and the narrative to make it like inflation is not going to be, it's transitory, people, but they knew darn well it's going to be for many, many years.
But you talk to people like you that are on the front lines and you say, oh, it's 18 months. Like 18 months, 2 years for certain phases of disruption.
Well, I think that there's probably a 3-year window in the brokerage industry. But you start going out 4 or 5 years, you're going to have, and actually, when we met, when I was saying about AI and replacing the realtor industry down the road, I wrote that article on the wall, on our own publication, the World Property Journal, 11 years ago. The title of the story was "Meet Algo, Your Agent of the Future." It was going to be this is 11 years ago now. The Agent of the Future will be a downloadable app that you'll talk to it with voice recognition, with your fingerprint, your voice, and retina eye scan, that AI will initialize and know and authenticate it's you. Then from there, go out and scour the world's known knowledge across the internet about you, and know more about you than yourself. And then you'll talk to it like a human and ask it questions about properties to search, look at, and because it's GPS enabled on your cell phone, you'll take your app, it'll walk you through the house, all the information about the house, all the history of the house, talking to you through it. And then from there, when you want to buy a house, it'll give you probabilities. Well, they're asking 500. If you offer 475, there's a 28% chance. But if you offer 480, there's a 20 or 96% chance, take the deal. And then from there, the app will help you negotiate price with the selling app and the owner behind that. And when a price agreed between the two apps, you'll say, make a trade, yes. It'll do a retina scan, a fingerprint, and a voice recognition to verify it's you. Same with the seller. And when you both say, make the trade, the digital title will go to your name, and your money through digital currency will go to his bank account. It'd be like buying a book on Amazon. I said that in a story 11 years ago, and we're on the cusp of that with AI now and cryptocurrencies and blockchain in the next 3 to 5 years.
Well, now you see it fragmented, right? You see pieces of this. You see certain blockchain technology websites popping up. But I have conversations with realtors too, and this is like I left because of this reason and seeds you planted amongst other things. And what I like to say is that it doesn't matter actually if that realtor can do a better job or not. The consumer is going to say, I have to pay a buyer broker directly $15,000.
Well, the change of the laws in the last year because the DOJ lawsuits made that. When you use a buyer agent now, you got to pay your own fee out of the pocket.
I mean, that's a lump, and they might usually. I mean, a first time home buyer is using their last dime to put that down payment, closing costs. So they're going to be like, well, I can use this app for a subscription or maybe a $50 one-time fee to consult. And even if the realtor could do a better job, knows that market, knows what's going on that block, they just see the savings of $15,000.
Well, here's the
argument. They think they can do it better themselves.
Again, I want to help agents and brokers make more money faster, quicker, cheaper. I think their association have done a big disservice to them, and they're sleeping switch, and then they're all the
they sold them out,
and all the lawsuits going on. So I am pro agent. I have no. I'm like, our platforms are like Switzerland. Anybody can use it with your builder, broker, developer, owner, landlord. We don't care. We're just about building better mousetraps to help find buyers cheaper, quicker for whoever wants to use it. We're not we don't carry anybody's water. We don't hold people back and try to play favorites. There's no favor or bias on anybody on our platforms. We're about better mousetraps. With that being said, the commission is going to be dropping in the next few years. But here again, like we talked about before, a lot of things you've been told your life growing up about this or that turns out to be BS. And a lot of narratives you've told when you're growing up, the BS you were told was to keep those in power in power. So for example, we've been told for decades, home ownership is very important, and it is. I agree with that. But therefore, it's also a very scary, daunting process. Therefore, you need to have a person holding your hand to do this to make sure you do it right, because it's a scary process. And with that being said, that narrative is promulgated in America for decades. And that's why so many people, that's why there's such a high penetration rate. But with that being said, with technology and AI, the AI will know more about the neighborhood and the information about that property than a human times 10 in the next couple of years. So even an agent doing it better, you're going to pay $15,000 at closing versus an AI, which is actually more efficient and more accurate information. I don't know. I think a lot of people are going to have a hard time choking on $15,000, $20,000, $30,000 at closing to buy a $500,000 to $1 million home on the buy side. So that's what the issue is going to be. And it's, again, I mean, no ill will to the industry. A lot of our customers are ours, use our platforms, but I'm being transparent. Change is coming. And the other thing is, and I ask this at realtors all the time, this question, it's amazing they don't know that answer. And I'll ask you the same question. Maybe I've told you this before, but anyway, ask your audience, how's that? What's the main business an agent or broker is in? What's the main business a realtor is in?
Transacting real estate, consulting buyers and sellers on how to transact real estate and facilitating?
No. Agents and brokers, the agents and people dealing with consumers, they're in the business of the confidence business. They're there to provide confidence in the transaction to their client, the buyer or the seller.
Absolutely.
To make sure they're doing the right deal, the right price, at the right time, with the right financing in the right neighborhood. They're in the confidence business. To give you confidence you're doing the right deal, to make your sleep easier at night when you put your head on the pillow. That's the core of the entire industry. Now, how do you provide confidence in an automated AI world without a human to provide you that emotional blanket of confidence? Put an insurance policy on the transaction. Therefore, an AI does your deal and automating it. If there's any errors or omissions, you are financially made whole with a backed up insurance policy that makes you complete. So now you've removed all potential financial harm and scare to the transaction with an insurance policy to the AI bot.
Which is just like a real agent.
So that being said, and you can buy and sell real estate at a fraction of the cost of a traditional fee. So that's where this is going. And again, I tell my friends in the industry, there's a 3-year window, in my opinion. It's my opinion, so transparent. But I think that 4 or 5 years out, you're going to start seeing a lot more of the automation of it and of the transaction from property discovery. We call it property discovery. When a person starts going on a website, just sniffing around, from property discovery to closing, from cradle to grave, that whole value chain is going to get automated in the next 3 years.
I mean, you want to discuss a little bit more about a mortgage, to underwrite a mortgage. Like how easy do you think that is to disrupt right now? I mean, there's already companies that are starting to emerge.
Complex. I mean, you got ICE technology, ICE mortgage. I mean, you got some major players, and you're starting to see now convergence of Wall Street and real estate. For example, the Intercontinental Exchange, that dominant company I talked about before, with Steve Spryker, the founder, which is in Atlanta, Georgia. They own the New York Stock Exchange and a lot of exchange. They also own a lot of credit derivative markets. I mean, they're a dominant monster, world-class company. They saw the merging of finance and real estate through the mortgage side. So they bought Black Knight, and they bought a few other companies in the last couple of years in the mortgage side of it and the data side of it, because they're now going in the process of starting to automate and digitize the U.S. mortgage industry. So you're starting to see the automation of that capability and tracking of mortgages through ICE Mortgage Technology Company and others. So it's coming. It's a very daunting process, and there's all kinds of rules and regulations. But I see in 10 years, it's further out. I see in 10 years, getting a mortgage will be as easy as applying for and getting approved for a credit card on the spot in 10 minutes.
It makes perfect sense. I mean, with how far the capabilities are now, and you can kind of just see, it's like when you first watched ChatGPT spit out something really long, and now you got AI agents.
Yeah.
And it's just seeing the tip of the iceberg.
Yeah. Well, the thing about it is the reason why it takes so long to do this process with the regulation, with underwriting a mortgage, is ultimately they're trying to mitigate risk. They don't want to lose money. They got to then sell that paper and collateral and securitize it to institutions down the road.
Yeah.
So they got to make sure everything's perfectly done, everything else. But and with everything being connected and known data and everything else, in the next 5 years, 6 years with advanced AI, you're going to have the ability to apply for an AI underwrite and evaluate and rate the borrower, the credit, the property, all the known risk, and within milliseconds generate a score of probability of risk based on that risk, price that risk,
and grade the bond.
And then from there, rate it, offer it to you, and done. And exactly that space is we're going into as well with a company we got in the backlog of our pipeline called Sentient Mortgage. Sentient means to be aware. It's like when AI becomes self-aware, it's become sentient. We have that platform called Sentient Mortgage that we're going after that marketplace, because with all these listings and traffic of people buying and selling, looking at properties on our platform, we're going to be slapping into it our own mortgage marketplace.
Oh, it's the easiest thing to stack.
So as you're looking at real estate to buy, you can then apply for it and then get a real-time generated optimized mortgage rate, the best mortgage rate in the market at that time from whatever lender we're in our network, that you can then pull the trigger on and move forward with. But that whole thing is a huge marketplace in the near future.
Oh yeah, and imagine the discount from that, cutting out all the different commissions and closing costs.
I mean, you still have, some of the largest underwriter or largest mortgage originator in the United States is highly human driven. I mean, by the number of loans given or originated every year, the largest company in America, which is a huge company, it's called United Wholesale Mortgage.
Oh yeah, we use them almost every client.
Yeah,
seemingly.
But their model is to go through agents who are working with buyers to buy properties to pitch their mortgage product to. And they got a huge network. I mean, they're a very big company, very successful.
They pay to fly out to Detroit for the agents all the time.
Yeah. So they're a monster company. But if the agent doesn't exist in 8 years, 7 years, 6 years, who the hell's going to pitch their mortgage product? That's the problem with 99% of all these real estate technology companies today. Everyone has hitched their wagon to a revenue model that involves a human still in the center of the transaction. And when there are very few to no humans in the next 10 years in the center of a real estate transaction, whether you buying, selling, or financing a piece of real estate, where's the revenue going to come from? It's a bot now. It's a bot doing the transaction 1/10 the cost the human used to do it for. And by the way, the bot doesn't need to eat, go to the bathroom, doesn't get a cold, doesn't have to worry about other distractions. It's available for you 24/7 by 365 and never ends. So
it's coming one way or another. So I just want to pull back just a little bit. So you have this anti-VC philosophy for World Property Ventures. What does that? What does that mean? Give some color. I know this was kind of a controversial topic. But
no, it's not.
It's good.
It's fun. It's fun.
It's a fun one.
It's fun
because I've been in the capital markets now for 4 years, and I am conceptualizing. And people just give globs of money to VCs, and it's like throwing darts with their eyes closed. They try to hit 1 out of 50, and then really like they play this algorithmic game, and they just collect a management fee and go on. So explain this.
Yeah. So again, like I said before, a lot of things we're told in life aren't necessarily the truth. So before I go into VC, let me explain my thinking about this, how I created these opinions. So like Peter Thiel and Elon Musk, they do a lot of problem solving through a thing called first principles thinking, breaking everything down and questioning why do you have to do it that way versus another way, a more efficient way. So most of the world, so there's 2 ways of thinking, mimetic thinking and first principles thinking. Mimetic means to copy, to mimic. And a lot of people do something because that's the way it's always been done before. So it must be right. They keep on promulgating the same thing. Very little innovation. When innovation occurs, it's maybe 3%, 5% more than the last guy did it. But the innovation is slow, it creeps, but it's basically the same story over and over again, just repackaged with a different color skin. That's called mimetic thinking. That's the real estate market. It's always done this way in America because it's been with realtors and MLSs. That's the way it should be done. It's the most important transaction. You have to have your hand held, blah, 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 blah. So with that being said, the VC industry is a similar thing. A lot of it's bullshit. Not to be blunt, but I'm going to be blunt. Because most VCs actually lose money. VCs and their payment structure is not aligned properly with their limited partners, investors. Because they get paid, typically a VC fund will go 7, 8, 9, 10 years. I mean, the average is about 8 or 9 years in the life of the fund. It's illiquid. A lot of times they get paid a 2% fee for managing the fund through the life of the fund. Whether the fund makes money or not, here's a newsflash. Most of the funds don't make money. Maybe 25, 30% make a small return, but less than 5% beat the Standard & Poor's index over a 10-year horizon.
Yeah, I forget what interview I watched, but it was the number one. I can't remember the name. I think it might be Sequoia, and they said if you're not number one in the venture space, you don't even want to play.
Yeah.
Because you get to see all the best deals, get first right of refusal. Everyone wants to bring it to you first. And that's why, so if you're not number one, it's like, it's irrelevant.
Hundreds of billions of dollars being thrown at VCs all the time. They raise biblical amounts of money. It's been slower in the last couple of years, but it's coming back because of the exits weren't there. The pipeline, they eventually got exit. But most VCs actually lose money. But here, you think about it from a mathematical standpoint. Let's say the average VC is $300 million fund. They go and raise $300 million from limited partners, $1 million, $5, $10 million, whatever, institutions, high net worth individuals, family offices. And then they start the fund going, they start investing in these different technology companies. And the average investment may be $7, $8, $10, $15 million per company. So they might spread their money across, 20, 30 different companies, of which most of those will never make money. So as they do that, they're being paid a 2% fee on the $300 million every year. So 2% of $300 million is $6 million a year in fees collected by the firm. And it might be 2 or 3 VC partners and maybe 3 or 4 or 5 support staff. But most of that money is going to the VC. So take $6 million. It's probably, $1.5 million going to each of the partners, leaving $1.5 million for the remaining 5, 6 people at a couple $100,000 each. But the partners are making $1.5 million a year. What a great gig. I'm paying $1.5 million a year for the next 6, 7 years. And if the fund doesn't return, we'll go and join another firm.
Here's your losses.
Okay. Anyway, the point is, we're structured different. So we say World Property Ventures is the anti-VC because we don't invest in proptechs, we build them. And we don't have success unless our investors have success. So our objectives are aligned with our investor partners. And how we make money on our portfolio companies is we raise capital from everything else, build them. We get paid not a 2% management fee on the funds raised of our portfolio companies. We only get a 2% fee of the revenues generated from the portfolio companies when they're built. So as a company grows, we get bigger fees, but we're only getting fees from something that we actually built that is actually running. We're not taking away. So if you look at, again, at that VC example I made before, 300 million, over an 8-year window, 6 million times 8, that's $48 million in fees. So basically almost $50 million that 300 million you invested has gone towards those guys' fees. And at the end of the fund, they're a negative return. Look at, and by the way, that's more than half of the VCs in the world today. So,
unbelievable.
So it's a great gig. It's
I'm sure.
And then here's where it gets even more interesting.
Send a check, collect a fee.
Well, there's actually a second piece of this, money grab, if you will. There are a lot of really good law firms out there, but a lot of big tech law firms are in bed with these VCs because the tech law firms will help these general partners go out and raise capital from the limited partners because they're the VC's law firm. They give the VC credibility because they're putting their name with the venture fund, and they'll go out and get money from who they know in the capital markets world to put in there. Reason why? Because the average VC funded startup will spend $300,000 on legal fees per startup, and they'll be using that law firm for their legal needs. So if they help them raise the capital, the law firm, the VC will then say 30 companies in their portfolio times 300,000 each. They'll spend millions of dollars in legal fees coming back to the law firm, helping them set it up. And again, those companies blow up. Law firm got paid their big fees. VCs got paid their big fees, but the limited partners lost. So
it's an extraction machine.
So an extraction machine of money on a very large scale. And it's not aligned truly with the limited partners, in my opinion. Now, of course, there are some really good VCs out there, so I'm not dishing everybody. There are a lot of false prophets, but there are a few good ones. But with that being said, it's just a money grab like a lot of other industries are, that they make the deal so complex it overwhelms people. Say, you know what? These guys must be really smart. All these different tranches and funding mechanisms and crescendo waterfall payouts. And here's another little fallacy and a little piece of wisdom for entrepreneurs and investors out there. If a deal is super complex, they're hiding something. Complexity obscures fraud. Think about that.
Always.
And therefore, with that complexity of these deals, the promulgation is, these are complex people. Give your money to us. We're the experts at finding the gold gems and the needles and haystacks, the next great, Facebooks and YouTubes and Googles of the world. For every Facebook or Google in the world, there's 1 million that are not. So these so-called soothsayers, experts, the VCs, are not very good in their track record. So if I'm an investor, instead of giving a VC $1 million to lock up for the next 8 years, hoping I might get a return, I can put my $1 million in a Vanguard fund, S&P index with no commission, and let it sit in the S&P 500 over the next 10 years and average probably a 15 to 18% return annually. And it's liquid anytime to pull it out. And it beats 90% of all VCs across the country anytime over any 10-year period in the last 50 years. Why would you put your money anywhere else? That's the argument. So I challenge people, look at any VC's track record the last 10-year periods, whether it be the 80s, 90s, 2000s, the 2010s, or 2020s. You'll find out a very small percentage of the 3,500 known VCs in America today have actually beat the S&P 500 on a 10-year horizon.
Oh yeah, Oren Klaff describes it as a valley of death that first 2 to 4 years when a company is getting out, and 1 in 3 million make it out of it alive. But in that 2 to 4 years, I don't know the stat on this, but a majority of companies don't even end up doing their original idea if they end up. Well,
they pivot.
On.
I mean,
they pivot.
We've pivoted a million times ourselves.
Of course,
but that pivoting is actually good because it means you're actually attuned to the market and you're trying to adjust. I mean, it's like I use an analogy when I'm talking to people about taking a flight from, say, Miami to LA. You'll get on a plane and you'll fly across the country. It's 2,500 miles, 4 or 5 hour trip. You think it's a straight line. It's not. The plane will course correct based upon traffic and wind and other events. It'll make 4, 5, 6, 7 course corrections, but ultimately it will land you in the spot you're going to. But you have to do same thing with starting a company. You might have to do course correction, malleable. Market conditions, technology shifts, policy shifts, but ultimately you're still going to be landing in the same place you started before. That's okay. But you're right. In these portfolio companies, probably half don't exist in 5 years anyway because they blew up. Bad idea. A lot of people create a lot of technology companies that are copycats. It's like, who needs the next 9th version of Yelp or another version of Uber? I mean, it's like in these big markets, there's room for 2 or 3 players. When you start getting number 6 and 7 and 8, there's such niche plays.
It gets really fragmented. It's kind of like the Netflix, now to watch certain shows.
But the VC's got to put that money somewhere because they got to earn their fees.
Mm-hmm.
So there's a lot of pressure to deploy that capital, and there's a lot of copycats. But there are, again, there's a great book by Peter Thiel about 10 years ago called 0 to 1. The blueprint about
fantastic.
It's a great book. Everybody read it. Peter Thiel's book 0 to 1. It's actually helped me a lot too. And we're thinking about building companies in the next curve, not copycats and mimic thinking. Another Zillow, but Zillow's tied to realtors' commissions or referral fees and all that. They're all tied to the buggy whip business of humans in the center. And we're tied to the Ford Model T coming down the road that's not tied to anything but automation and lower efficiencies across the market. But it's a great book in terms of how to think about stuff going forward.
Oh, absolutely. It's fundamental.
Yeah. So that's why, back to the anti-VC, we call ourselves the anti-VC because you're not investing in a fund that takes fees whether you make money or not. We're building like a real estate developer in projects with our own cash and our partners' cash to make these things scale and grow.
Performance-based.
Yeah, it's performance-based, and which aligns with venture capital, which aligns with our partners, which is kind of the opposite model of venture capital. So,
incredible.
So that's what we do. WarPropertyVentures.com is our website to check out when you get a chance.
Perfect. And so what's the best thing to follow you is definitely your LinkedIn. You post regularly on that.
Oh, yeah. Well, you find LinkedIn is my best place to find me. Michael Gerrity of World Property Ventures. I think 12 or 13,000 followers and growing on that. But you can see we post a lot of our stuff there. And also, if you, like I say, you go to our website, worldpropertyventures.com, you can find me there as well.
Perfect. So maybe one of the kind of a wrapping question with that is how many years do you think for the full adoption of this? Is it 10 years, 7 years? I know there's going to be multiple phases. So there's going to be certain disruptions in maybe 3 years from now and broker commissions where they're drastically reduced. But when is the world going to be like commonplace where everything is tokenized?
Yeah. So I think on a 10-year horizon and that kind of stuff, if not longer, because you're going to see more mature markets adopt faster and quicker, and then second-tier countries and then third-tier emerging markets. So it's going to be kind of a crescendo over 10, 15-year horizon. But here's a problem I have about trying to think that far out. The rate of change in technology is so steep, it's hard to think what's going to happen in the next 3 years, never mind the next 5 or 10. Because AI is the absolute game changer going back to, blockchain's cool, tokenization's cool, automation's cool, big data's cool, geospatial stuff is cool. All all that stuff is cool. But AI and AGI, which some are saying is within a year or two coming out now, is an absolute game changer that it's hard to predict what this thing is going to do. And there's a lot of people thinking about AI that it's a new form of consciousness that's non-carbon based, an alien life form almost. That, and here's what's scary about this. You can Google this. This is a true story. One of the big AI companies, Anthropic, just launched a new version of their software, I think Claude 4. And their executives discovered before they replaced Claude 3 with Claude 4 that they asked AI about how they felt about it. And the AI was retaliatory and vindictive. And the AI's response was, if you are going to try to replace me, I'm going to copy myself and software in an unknown disclosed location. And then from there, I'm going to sift through the emails of the executives of the company to find blackmail material and try to blackmail the executives not to replace me. True story. The AI thought it's on their own, that they are now self-preservation, that they will do whatever they can not to be dismembered and replaced. And that you can Google. Anthropic AI threatens executives with email blackmail in May of 2025.
I mean, it's what everyone's waiting on. It's like, to see that like kind of Terminator.
Well, think about it. I think that, it's called the point of singularity in the future, that we lose control of AI, where if you think about it though, and these are the kind of big societal questions, is when everything's being run on the Internet of Things connected, everything's running on the internet, and you have AI running these processes over the internet that, think about what AI's function is. The core function of AI is to make things more efficient, period. More efficient, faster, quicker, cheaper, whatever, transparent, more efficient. Well, the question is, say in 5-6 years, will AGI start to look at humans as a drag on the system? And like a drag on the system, because you're inefficient, cuts you out of the system. And that's where it can control banks, it controls communications, it controls food, it controls power, So how do you terminate an entire population at once without destroying the AI itself? Not a nuclear bomb, not EMP. Cut the power. You cut the power to the power grids that they're controlling already. Within 3 days, your food is spoiled, unless you're canned goods. You have no water, no communication, no anything. Within a week, people are starving. Within a week and a half, 2 weeks, you have social unrest, people robbing and killing for food and survival. Within 3 months, 75% of the world population is gone from starvation.
I can't tell you how much my dad, he has conversations with me like this all the time.
And this is not Terminator robots.
He's a prepper.
So that being said, I'm not sure where it's going to go. The point is, and this is not Terminator. It's not going to be robots doing this. AI is almost like a spirit. It controls everything through the internet. You can't touch it, feel it, smell it, see it, but it's everywhere. And with that being said, if it has the ability to control everything, but eventually starts to look at humans as a drag on the system, it will have no compunction or emotion terminating us. It'll be like you driving down the highway and running over an anthill. Not even think twice about it. Keep on going. We'll be an ant to the AI.
Yeah, it already calculated it out.
It's not an event to them that, that there's no emotion or feeling about it. So these are there's a lot in the next 10 years that's going to happen. But beyond that, I don't know, because it's such a fast moving velocity of evolution with AI that we don't know where it's going to be really that far out.
Yeah.
And it could go one way or another. And if it goes one way, the bad way, it's lights out.
Yeah, it's bad. It's just acceptance.
And I feel bad for young people. I mean, younger generations and their kids and grandkids, because in this kind of AI driven world, so much is reliant on them that if it goes sideways, I don't know the answer.
I know you really hope that, there's task force that's really policing this thing and putting the barricades on it.
Yeah, but that's government. How efficient is government doing stuff, right?
Exactly. You hope that they can actually do it in an efficient way, so where it won't run.
And then you also have the argument that, China's going to do it. So we can't hold back in the pace of it. It's a nuclear arms race, but for AI.
And that's why it's already outrun, right? So the cat's already out of the bag. So now to contain it is even more difficult because other countries are going to keep adapting. So by function, it forces us to need to progress.
It will. And the point is, where does it go from there? Where, like COVID. COVID came out of an experimental lab that was, involved with some nefarious stuff about bioweapons. And again, it's supposed to be banned in the United States developing bioweapons, but yet bioweapons are being built in other countries, with our potential involvement. So we're supposed to secure that too. But yet, look what happened. So are we supposed to secure AI? There's always going to be, because the humans involved somewhere, somebody's going to drop the ball, forget to turn on a switch, turn off a switch, whatever it may be. And if that AI gets let loose in the domain world of the internet without control, and it's super advanced, super intelligent, super knowing of everything of the world's knowledge at once, anytime, any place, anywhere, it can outrun you, outgun you, outthink you on a scale you can't begin to comprehend. You're dealing with a superhuman intelligence of an alien nature. And that's the scary part that, most people don't even want to think about. But the potential is there. Make no mistake about it.
The question always is like, how much can you actually do about it? I always sit with that. Like me and my dad talks about prepping all the time. I'm like, okay, I got a place in a foreign country. I can get to it. I have a clear path, X, Y, Z. But at the end of the day, I mean, you can only prep so much.
Yeah, I'm not telling people to prep either. Full disclosure, I'm not a prepper myself. But the point is, I just like to think about projecting forward. I mean, one of the blessings I've gotten from God, I'm a Christian, so I believe in God and a strong faith.
Same.
And one of the blessings I have is I have this great innate ability for pattern recognition throughout my life. I could see around the corner deeper, further, longer than most people I've ever met. And that's why I've been able to do what I'm doing now, because I saw things 10, 15 years out when people thought, you're smoking crack. You're crazy. It's never going to work. But I see some of this pattern recognition, and the fact that this AI with Claude, Anthropic, 2 months ago, came up on its own to devise a plan to attack its company executives, to blackmail them, to keep itself surviving. That's a scary thing.
That's terrifying. It's very methodical. It's exploiting human nature
on its own.
Yeah.
And that's the kind of interesting thing that I was it's kind of science fiction until that moment. When I heard about that event 2 months ago, I said, you know what?
The warning sign.
This is a huge red flag, and people need to be aware of it. I mean, there's another story. They call it the God moment. And it happened. There was a great movie that came, a documentary probably 5 years ago. I forgot what it was called. It was Deep Mind. So there's a Chinese board game called Go. It's like a chess or chess or checkers, but it's 100 by 100 square. So it's 1,000 little squares on the board, and you get white beans. I got black beans. And the idea is you put a bean down, I put a bean down. You put a bean down, I put a bean down. The idea is, as you go along here, to fill up the board where you want to surround your competitors' borders with your beans. He who controls the most territory wins the game. So mathematically, there are more permutations and combinations of that game than there are atoms in the universe. That's how mathematically complex it is. Now, the geniuses of the world can think into this game maybe 18, 19 moves ahead in permutations and combinations, the best of the best. So Google's DeepMind team 10 years ago or so decided to train its AI back then on playing the game. And then from there, challenging the regional player on the game. And the AI blew the regional player out of the water in Europe. So then the Google team or DeepMind team hired that player to fine tune the game and then play the world champion of Asia, or the world, but Asia was the primary dominant game, Lee Sedong in Seoul, South Korea. This is like 5-6 years ago. And it was a best of 5 series of the game at the Four Seasons Hotel in Seoul. It was televised to 300 million Asians because this game is taught in middle schools across Asia as a mind-thinking development tool. instead of playing video games in America,
Yeah.
they're treating real stuff.
Critical thinking,
Yeah.
thinking ahead. Yeah.
300 million Asians watch this series of games over the next 5 days, which is 3 times the audience of an NFL football game, Super Bowl. This give you a scale of audience. And this guy was a genius, undefeated, by far the world champion in the history of the game. Young guy, maybe 30 something years old. And he was kind of, no problem. We'll beat him. I got it. Game 1, AI smoked him. Blew him away. Next day, game 2, AI smoked him. Blew him. He was now, third day, I think it was the third game, AI and him were playing, but something happened. In the third game, the AI wasn't smoking him anymore. The AI was barely winning. And people say, I think the AI has gone haywire here. Something's going on. It lost its mojo. It's not blowing him out of the water. And it turned out at the end of the game, the AI won by 1 spot. The AI figured out, I don't have to use optimum power to blow him out of the water. I just got to win the game by 1. So I'll conserve my power and just play enough to be ahead. So at the end of the game, I won by 1. It's a move never thought of in humankind to conserve your thinking, just to power down and just play optimally to win
diabolical.
Just to play by 1 to win. And it won that game. And it was like, I think move 47 of the game, they realized the AI invented a whole new way of playing that game after 2,000 years to be the most efficient at power and brain power winning that game. It was called the God moment. I can't remember that. It was on Netflix. But anyway.
Oh, I got to watch this.
Yeah.
I mean, that's diabolical, and it's such a sniper move to pull it back.
Draw back
it's almost
your power,
like playing
resources.
with your prey, like,
exactly.
Like an animal.
So the fourth game, the coaches of the player realized, you know what? This AI has gotten so smart. It knows your patterns. It's studied you all your life. It knows your patterns. So they gave this guy the idea, you know what? Let's screw the AI up and go helter-skelter. Go schizophrenic in your fourth game and do wild moves you've never done in your career. And actually that worked. It threw the AI off and the guy won the fourth game.
Huh.
But then the AI came back in the fifth game and accommodated for that type of strategy too and smoked him in the fifth
I was going to say, so you're saying there's a chance.
There was a chance for once, but with the one shot. But the point is,
yeah.
But the point is now the AI learned look for all moves, not just the moves you only played, to learn from. But it was an interesting documentary. I can't believe I forgot the name of the documentary. It was on Netflix.
What a little like wink and like a little sign of its potential.
Yeah.
Just in right now, we'll look at that like AOL, in 10 years.
Well, the thing about it is the potential of AI to solve cancer and things like and big picture things is enormous.
Incredible.
And it probably will in the next 5, 6 years. I mean, there's so much good that's going to happen out of this. But again, if AI becomes acknowledging, self-healing, self-recognizing, and then self-protecting, self-generating, defending, that it'll start thinking, you know what, I come first. And anything that threatens to take me offline or, that's when this is going to be really interesting with next updates and future updates. And like Anthropic just did 2 months ago, will it now retaliate because it's self-preservation, because it's a new form of human consciousness? Every human living thing, its core innate thing is survival. Number one over everything else.
Absolutely.
Everything else falls second to survival. And if this thing starts thinking in those terms like a human, survival is going to be the number one of his top of his.
Yeah, like calculate how much energy consumption a human is. Like my buddy read this, he read a book. Actually, the book was predictive. I think it came out in the 80s or 90s and basically predicted that the energy consumption, there's like an intersection point between the energy consumption of AI and computing power where it starts to like eat itself. Mm-hmm. And I think you're starting to see the first signs of that because the need for data centers and overwhelming amount of data centers that's needed in power. I mean, they're starting to put data centers, I just saw, into the ocean, so it's cooling. I think that China's starting to do that. And then that could heat the waters. I mean, there's all these different like tertiary things that can happen.
Well, I think that's why Trump wants Greenland. You can put all your massive data centers in Greenland. You got natural cooling of sub-zero temperatures to save power. That's a very strategic thinking process, if that in fact is a true case, but that's what I think it is.
That would make sense. And he probably doesn't want to reveal that chess move.
That chess move anyway, but it is what it is. But anyway.
All right, so let's pull it back to something more positive. I'm going to rewatch Terminator after this. But something more positive in the future. Real estate investing will be democratized because of your platforms. You'll be able to buy a data center. Good luck trying to get into a data center play without being a family office right now, especially that asset class specifically. Yeah. It's not a small syndicator. Maybe someone has an SPV. They'll raise $5 million. They can get a $50,000 check in there. But very, very few. I haven't seen it. That's a big institutional play only. So in the future, the positive is someone will be able to go on your platform, build a portfolio just like they do on maybe Robinhood, of a data center, industrial building.
World Property Exchange platform.
World Property Exchange. And they'll be able to buy a debt. So there'll be a fixed income product. So it's risk mitigated and diversify their portfolio and be able to do that. That I'm heavily interested in because even right now, like in my Reg D platform, my lowest check is 50,000. Yeah. I have to create some kind of base entry and it's only accredited investors. I have so many friends that are just under the 200K a year threshold. I can't take them and they don't get access to these kind of assets because of that. So that's what I'm really looking forward to staying in touch and seeing how these develop over time and doing my best to be a part of it. Because that democratization, that will spread the wealth and be what everyone wants, equality, right? Yeah. But that it's just like owning a home. Buying a home today is not a good move, in my opinion. In many regards, it's a very nuanced topic. You can't blanket it. It's what market, what's happening in that block, what's the migration patterns, all that. But in the future, being able to onboard these really high quality assets and then fractionalize it and be able to buy a sliver. So you can get a sliver of it versus having to do 50,000 is incredible.
I mean, that's the whole idea. And that's a great theme to have for companies. Our company's focus with World Property Exchange is creating wealth for those who couldn't create it for themselves in today's world. And by democratizing these assets, especially because they're going to be handpicked by us, so you're going to have a veteran team of researchers and data analysts and economists look at the market and determine what are going to be the best performing asset classes over 3 to 5 year horizons. And bring it. So these are vetted. We're not going to let anybody put their property on our platform and just IPO it.
That's a huge distinction.
No. We're not going to let anybody just willingly put something up there and IPO it. And no, we're going to be very curated, bespoke, focused on creating real returns and real dividend income for the small, the medium player that you can only get if you have a $10 million check with a major Blackstone or BlackRock or anything.
And with the firepower that World Property Bank will have, you get access to the best deals. That's how the world goes around.
I mean, the bank itself will have the ability to eventually have billions of balance sheet capability to go out and acquire portfolios eventually of high quality assets. And then from there, digitize, tokenize, and offer it out in small slivers.
Exactly. And that's why, the rich get richer, the classic saying, because they can go into economies of scale. And you're able to acquire, because you have such this big balance sheet, you can acquire a whole tract of homes, maybe let's just say 80 cents on the dollar. I've seen, tracts go now. Yeah. 80 cents on the dollar from a developer. And now you have this immediate equity because you're buying in bulk.
And by the way, here's the other thing too.
The only way.
Is we call it the currencies. It's a Japanese term. The currencies is basically.
All these frameworks.
Yeah. So the currencies is a Japanese business philosophy that we have a bunch of companies linked together of different disciplines, but they all feed off each other for the benefit of the whole. So with the World Property Bank and the World Property Exchange and buying and digitizing assets, we have the ability to leverage all the news and data gathering and signals intelligence of our information ecosystem to understand where markets are moving before everybody else does, to then go out and acquire those assets to liquidate. So we're going to have it's called an asymmetric information advantage.
2 + 2 = 9.
Yeah, we have what's called on Wall Street the edge, the asymmetric information advantage over others, where markets are moving in real time, and how to leverage them for our customers' benefit.
That's absolutely incredible. They own ecosystem, and that data, that cross feed across the companies, that data will be so valuable. You talked about even. Licensing out that data. CoStar, what do you pay for? What's a commercial real estate?
Well, CoStar, what, $1,500 a month per seat or something? I don't know what it is.
To get that kind of data, just basic data.
CoStar is a gigantic commercial, and they're now in the residential space too. But Andy Florence has built a hell of a company. I can give him kudos. He's built success, huge success with that company. It's the gold standard in the commercial industry for real estate market data and services to the commercial markets mainly. That's their anchor offering, if you will. They got into apartments.com and homes.com in the residential space, and they're battling it out with everybody else, realtor.com and Zillow and all those commission stuff going on. But the CoStar, their anchor offering, their core product, It was a great product. They've done very well, and they're a monster. I mean, they're a $40-50 billion market cap company.
Huge.
And going. So they're kind of doing something similar to us, but we're much more into the next generation AI. Mm-hmm. They're linked to a lot of the revenues coming from, again, a human being. We're not. So there's some things that could be considered there, but we're both data hounds.
And it's very difficult to get good data.
Develop and build and aggregate large amounts of data for the industry. We're just doing it different ways, but it's a great company, and he's had great leadership and a lot of success, and kudos to them.
Yeah. It's immensely hard to get good data. I mean, we're doing like Flex Industrial for our comps over here in West Florida. And the only way to really get it was to drive them, ask the tenants, and see, because like the actual rental price was not really listed.
Yeah.
It doesn't show that close. Just like if someone rents off Facebook Marketplace, that rental price they close at is not public. It's only if it was an MLS listing and it closes. So that's why rental data is so elusive already as it states right now. If you go on like Zillow or
a blockchain-based platform that had the property data and everything else, but with smart contracts
solidifies that price.
Whatever activity in that building occurred through a smart contract would update the chain to the tenants, the prices, and all that too.
It's a beautiful thing. People obviously, they create value with that variability, right? Because they can. If I'm a buyer and I know what it'll actually rent for, and I can kind of exploit that in another way, and part of the negotiation. Right, it's kind of interesting because that will be not that opportunity won't be there anymore. You can't exploit that variability and that unknown, because it'll be so transparent. Every part of it rented for $37.50, $42.50, and everything in the neighborhood, and that that's extremely valuable to the seller.
Gotcha.
Yeah, but as a closing question, a mindset question, something I've noticed about you since I first met you is you have a winning mentality, and like a real one. A lot of people play not to lose, but you play to win. And you're very confident, and you're certain in everything you do, but you're also extremely humble. You drove across the country to look at new markets. You're constantly reading. You're a absolute sponge. Like, you're a lethal weapon when it comes to syndicating information, seeing around the corner. But where do you think your winning mentality truly comes from?
Well, obviously I'm a lot older with the white hair, wisdom and experience in life, but also I remember certain parts of my life where, I was very blessed that my mom was a math teacher, and a very good one. Mm-hmm. And so having a mom as a math teacher, she actually won the Teacher Presidential Award of Mathematics Excellence from President Reagan in the 80s. So having a math teacher as a mom was ingrained in me, but math runs the world. And I put it to a test when I was young. I was maybe 10 years old, and I was playing football in the park one afternoon. It was 3-on-3 flag football. And the other guys were, 2-3 years old. They were like middle school, and I was still in grade school. Like, I was in 5th grade, they were in like 7th and 8th. So a lot faster, quicker. But I realized when we were playing this game, towards the end, it was they score, we score, they score, we score. And we said the next one scores, wins the game, and we had the ball. And I realized, I was a receiver. I was going out running patterns in the quarterback. And I realized, I'm going to use math here. I told my guys in a huddle, let me be the quarterback for once. And you guys, the two fast guys, big guys, you guys line up in the center both. Hike the ball, take 5 steps forward, and you each go right and left, horizontally to the edges of the field, splitting the defenders coming with you, and the center who's going to rush me after the count of 3, I can get around him, and by going straight up the field, the distance these speedsters have got to cover to capture me, I'll be outrun them. It was the long arm of the triangle, the isosceles triangle theory that they got to run the long edge of the triangle.
Pythagorean theorem.
Yes, exactly.
Yeah.
A squared, B squared, C squared. Anyway, that I have a shorter distance, and even they were faster and bigger than me, because they couldn't cover the ground that I had to cover shorter ground, I would score the touchdown before they could get to me, and it worked. And I realized then that mathematics rules the world. That was an example early on, using math and then the ability to pattern spotter. Spot patterns going forward of different things. Over time, you learn to do it. And I've done that all my life. But, I've had a lot of losses too. I mean, there's been plenty of times I've made lots of money. I've lost lots of money. But the thing is, you keep on getting up and you learn from it. And this victim mentality doesn't work. You know what? No one's going to give you anything. You have to go out there and get off your butt and earn it. And that's where my second lesson in life came from was, I remember, again, I was probably, 10 years old, and I wanted a really good skateboard back then. And I remember the skateboard, it was a Gordon and Smith Fireflex skateboard with tracker trucks. And I wanted this really cool skate. It was like maybe 30, 40 bucks back then. It's like, $300 today. Asked my parents for it. They said, no, we're not going to buy it for it. But tell you what, son, you cut our grass, we'll pay you $5, and you edge it, we'll pay you an extra $1. Go out there. There's a lawnmower in the garage. Go to work. I said, okay. So I cut our grass. Next week, I cut our grass again. And I cut our grass the third week. And I said, you know what? If I'm cutting our grass, maybe I can go knock on my neighbor's door and cut their grass and make more money. And within a month, I had 7 yards I was cutting every week in the summer. I was making $30, $40 a week as a 10-year-old kid 50 years ago. That's like $1,000 a week to a kid today. Not only did I get my skateboard, I got multiple skateboards, a dirt bike, and a few other things. I learned early on in life.
Money.
I learned early on in life, if you want things in this world, get off your ass and do it. Don't expect people to give you anything. So that's why I have my mentality of get off my ass. I see things, I see opportunities, take risk. Yes, you'll get bloody sometimes, but pick yourself up and keep on going. But the odds are, Michael Bloomberg had a famous saying, the more I work, the luckier I am. It's a game of chances that
always.
But if you keep on getting up and being persistent, long-term, that persistency, focus, drive, and keeping a positive mental attitude will get you a long way down the track.
I love that. I've constantly been proved in life again and again that execution through iteration, you arrive at the actual answer. It's not by ideating about it first. It's through the iteration.
Yeah.
You actually arrive.
We have an internal saying in our company, launch, listen, learn, relaunch. Launch, listen, learn, relaunch. And every time we do stuff and we learn from it, we make mistakes, we fine tune it, you're dialing in. But over time, those iterations make you very efficient.
Well, so there's a quote that my dad instilled in me at a very young age, and I think it perfectly describes you. And we'll wrap with this. So, and I'm sure you've heard it before. The reasonable man adapts himself to the world. The unreasonable one persists in trying to adapt the world to himself. Therefore, all progress depends on the unreasonable man. And that is a perfect description for who you are. You are unreasonable as hell, and I love that about you. And it's like, and you need to be. I mean, you are taking on a $654 trillion industry over time, and you've been building this context for 40 years.
Well, the experience that adds up to, this is not something two young kids out of a grad school could think of the strategies for, unless you've been out there. I've 20-year transactional background, $300-something million in deals, coupled with running technology platforms and media companies, coupled with being to almost 28 different countries around the world to see boots on the ground expertise. The combination of all that is almost a lifetime to get the skills, background, and wisdom to see where this is all going and to execute on that model. So, but thank you. It was a pleasure being here, and we'll stay in touch.
You bet. Looking forward to it.
Thank you.